Can everybody see that this could be considered range 1? Okay. This could be a new range, and we could call that number 2, and that is the move down. And then our new one would be number 3 up here. Okay. So you have, this is range 1, this is range 2, and this is range 3. The most important part for me is to recognize what I'm looking at right there. Now, I will include this as my starting point. This could be my ending point, as long as this here does not drop below what? Can anybody take a guess? As long as this does not drop below what of range 1? Exactly. So if this does not drop below 61.8% or 618, however you want to say it, 618, it means that number 1 is still intact, because the 618 is the golden Fibonacci. Okay? So once it pulls back, I want to know when I measure from here to here that this does not come back over 618. As long as the trend is intact, I can then measure the whole entire range. Does everybody understand that? Okay. Now, if this had to pull back more than 61.8%, then I would take this out of the equation, and I would only measure from this pivot low into this pivot high. Okay. This is something that was very, very eye-opening for me in my own studies. Nobody has taught me this, but it really made a lot of sense to me. The next thing that I want to show you when trading fibs is understanding which range do you take. Let's say that each one of these are a day, and it went straight up. Well, a swing trader could take into consideration this entire range because they are a swing trader. And let's just say that they found the 23.6. This is great for a swing trader, right? So picture a swing trader that you might know. They are going to use levels like this. If you're a scalp trader or a PMZ trader, that's not going to make sense to you, because X, Y, and Z stock down here could be $90, and up here it'd be $150, and a pullback to the 23.6 could be $125. Everybody understand? So like a day trader is not going to be like, well, okay, like I understand that the 23.6 is here and that's support. Okay, so this is support, but you're not going to be okay with going long here and having a stop at 125, right? That's not going to work. But the swing trader will measure this entire range. So if we were to take this and look at it on a smaller time frame, it might actually look something like this, right? It might do some stuff like this, right? And then, that, and then this. And so the day trader, the intraday trader, is going to say, I'm only going to measure from here to here, because my values on the stock themselves are going to be a lot different. It's going to be 150 here, okay? And down here, let's just say it's going to be 147. Does everybody understand that? So we're breaking it down. Different time frames give you a different look. And so this is exactly how we trade in here, okay? We're using structure, we're using supply and demand, we're using Fibonology, all of that to come up with a blueprint. So each and every person is different. So the people who are trading on the intraday today who took advantage of a breakout above the PMZ into the intraday levels, all of these that I'm pointing out to you, boom, target 1, target 2, target 3, target 4. They are benefiting, right? The swing trader could be benefiting as well. It's just that we're different. So we have people that are, shorting here. We probably have people on higher time frames that are going long up here. But you could see here, there's a couple things that make a lot of sense. Your TTM squeeze, okay? Your TTM squeeze. I want you to see the, what's so amazing about it when it's working with trendy levels. And I know I've shown you guys this plenty of times. If you know that you're supposed to go long here, because I give you those levels in the morning, and you're trading to the upside, what are you looking for down here? You want to be careful, right, of the blue levels. Okay, you can wait 1 to 2. It's up to you. So 1 to 2 blue bars, and you want to be cautious. What's really, really spectacular about using trendy levels with TTM squeeze is the fact that we hit here. We know that this is resistance. We know that this is a target for today. And then all of a sudden, we start to go blue, right? And that gives you the indication to, just like you did, Three Dog Trader, stops go in at high a day, and he's fading it to the downside and using those targets again. Yes, that area is for taking profits or taking a short until proven otherwise. Until proven otherwise means the methodology is your go-to. Until proven otherwise means you got stopped out, and I'm sorry, but today wasn't your day to go short there. Go long. Okay? Everybody understand that? Now, let's look at Fib. Let's look at Fibonology right now. Okay? Just looking at these charts. Let's measure from the chaotic candle to the pivot high. This is your 618. This is very important. Okay? Guess what? What I just taught you is, in this scenario, this range has not been broken yet. Because, dun 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 dun, the 618 is not broken. Okay? Matter of fact, buyers stepped in. That's because other people are able to identify the 618 and they are trading off of it. If the 618 breaks, what is your risk to reward? Inside and up. Okay? So if I went short at a break of a 618, guys, I have to ask myself, is it worth the reward?